I can hear you. Oh, on the YouTube?
Hello? Okay, there we go. So it's got my mic, but it's getting it direct from my microphone, which it's not going through my uh, NVIDIA
So that
NVIDIA
means it's
thing.
not catching mine.
No, it's not catching mine. Like my mic, if I have my mic through my NVIDIA, I don't even know, NVIDIA filter.
Okay.
That's it. Just doesn't catch it. Okay, let's see if I can raise my volume up for you guys. There, is that much better?
Oh yeah. Yeah.
All right.
Loud and clear.
Beautiful. Too loud? Too clear.
Mm, maybe I mean for me it's like you're in my ear, so it's so maybe a
Oh,
little
in
bit.
your ear. Arrow,
Don't do that. Oh
I love you.
crap.
Okay, guys. Again, thanks for coming out. For those that are here so far, um, Vince, nice to see you, buddy. Our architect and our engineer are both in the room today. Let's hope they don't ask any hard questions.
Nice. Well,
Um,
maybe they can help because of what we're doing. Maybe they can
oh,
chime
actually,
in.
yeah, they could jump on here and give us some good feedback on what we're doing. Okay, let's do it, my man. Let's do it. So, what are we going to talk about today? Um, yeah, I don't know, Arrow. You tell me, bro. This is your show today.
Well, I think what we wanted to do was go through the numbers a little bit, right? Just to break down what it would look like for a real estate investor to invest into a multifamily and do some value add, and then down the road refinance and hold on to that asset for a long term. There's a especially right now. I think a lot of people they've gotten used to the easy burrs over the years. Now that the market's not as favorable for those type of strategies, a lot of people feel like it's done. You can't do that anymore. Um, and for the most part, maybe to a certain extent, that's correct. But there are, specific deals out there where you could still get a really good return. Get a major chunk of your capital back at the end of the refinance, and then also really hold a well-performed asset, especially in a city that's going to grow in the future. You get to hold it for long term with minimal, capital into it, and you're getting positive cash flow. You have good debt on the property, good financing and things like that. So something that as an asset class it makes to hold on to for a longer period of time and generate wealth over time through cash flow and future appreciation. So there's a couple of different ways you can go about doing it, right? So I think a lot of investors that are um, pretty savvy when it comes to renovations and things like that. You could definitely do a triplex or a fourplex. And I can share some of those numbers too and how I am analyzing those deals right now. And then I can also share some of the more passive side where maybe you're not as a savvy investor, or maybe you don't have that much capital in order to do a full burr, purchase, renovations, and then also the holding costs throughout that process. We can share an option that's more of a GPLP type of structure where you can invest capital into that and you also get a solid return at the end of the term. So those are two kind of different options. What do you think? We should talk about both, or you want to just focus on one of them?
I think we'll go with, I think, as depending on how much time we run into these things, I think we should also just kind of touch on some high level, like newbie investor kind of stuff, because I know you're going to go deep and, you're really going to dissect the fish. But I
Hmm.
think even for some of the listeners, right, like even when we repost this on YouTube, some of these guys are going to not necessarily know everything that you're talking about, right? So if we can kind of touch on some generalities of the terms of like what NOI is, how we're kind of coming up with some of these costs, where we came
Mhm.
up with the reno costs, like just some of that stuff, right? Like just so that we just generalize as we're going through it. I think will be helpful for a lot of people to kind of get a
Yeah,
good
for sure.
understanding, and it'll make for good content as well, right?
Yeah, no, that makes sense. Okay, so should we go both, or should we just do the larger, more of
If you think you can get through both relatively easy,
quickly?
just
Yeah.
the same time, like that's all. We just want to have, you
What's
know.
our hard stop? Because I feel like usually we go more than what we should.
Yeah, I
Um,
mean, usually
so
we're wrapping up, right? Like within the hour, and then after that, it's kind of like as the questions start getting fielded, right? Like that's kind of how we end up
mhm.
um, going down. So,
Okay. So I will go through. Yeah, let's start with the larger one. I think it'll be fairly quick just because there's not much involved from a investor standpoint because it's more of a GP-LP structure where you have a general partner and then a limited partner. Um, and essentially, you would be acquiring a large multifamily. In this case, I'll share the project. It's a 10-unit project in Hamilton. So let me jump into sharing my screen at the bottom here, right? Let me know when you see it, okay?
okay, I'm gonna just switch modes here, and we're gonna go like this. Did you share your screen? No, there it is. That's what I want.
How about now? Do you see it?
Yeah, we're good. I'm just fixing your face on the Grow network thing.
Okay, give me a sec.
All right, I think we're good.
Sorry, give me a sec. Just okay. So you can see the screen, right? The numbers, you can still see it.
If you're looking on my screen, I can see it very well.
Okay. I'm not looking at your screen. I'm looking at the actual sheet,
No,
so I
no, no,
can't
no.
see
I
it.
know. I'm just talking to the guys in the audience. If you can see that, or I'm gonna make it a little bigger. I could probably make it bigger. Can
Okay,
you zoom in a little? Actually, no, that's fine.
this is good. I could zoom in to 150 maybe.
No, no, it's okay. It's okay. I can. No, go back. Go back. It's fine.
Go
I'm
back.
gonna just go bigger.
125.
No, no, it's okay. It's okay. I'm actually like stretching it. Now it's really good. We're good.
Okay, what if I go
You can
like
go
that? Is
100.
that good or
Yeah,
no?
that's fine. That I
Okay.
can see that really well. Here, I'll just do this too.
I just make sure we're able to follow it, right?
Yeah, I'm just stretching your screen. I know you can't see it, but I'm basically adjusting your screen on my screen to make it look
I
nice
see.
and
Yeah, now
sexy,
I'm seeing it.
right? So there we go. I better need to see the number of the rows. Okay, there we go. Yeah, I think that looks good.
Okay.
I can definitely see
All right,
everything.
cool. So something like this, um, maybe next time, or I might even show some pictures at the end of what this property would look like, so that way you have a better understanding. Sometimes we're just looking through numbers, you might not really see or be able to visualize what it is that we're talking about. But this is a 10-unit multi-res property in downtown Hamilton, not necessarily purpose built, but it's got a very unique um, look to it, which makes it ideal in terms of, I mean, not necessarily ideal, but more desirable, I would say. And currently it is 10 units. The zoning does allow for additional units. So the value add play here would be to renovate the existing vacant units and then work on the additional units that are not currently vacant, which is at 50% right now. And then also add two more units, possibly more. I think we're thinking there possibly could be there some room to add more, but for sure you could definitely add two more units to the existing 10. Um, so we're looking at around 12 unit at the end of the, when the renovations are complete. We're looking at a, fully functioning up to market rents, 12-unit property in Hamilton. So what does that look like? So initially, to acquire the property, um, the reason in this structure it's beneficial is because sometimes, obviously, it's a bigger project. You need to have certain qualifications for financing in order to obtain financing for this project, right? A lot of these cases, they're going to give you the purchase and some construction financing. So depending on what the appraisal values come in, those numbers could change. But here are just some of the assumptions that we're currently making, and we will confirm this through the appraisal process. Initially, we're looking at a purchase price of 2.2 million. And here's your, very simplified cash requirement in order to close on the property. Something like this, you're looking at 25% down. Here's a typical interest rate that you would find for um, a bridge finance in this case, which would allow you to stabilize the property and then come back for a refinance with the traditional mortgage. And that would be around a 16 to 18-month term, right? So this is interest only. So here, this basically gives you your capital requirement for your interest reserves and also for the renovation interest costs, because this will be financed through typically the same lender. So unless there's any specific questions, I'll go through this pretty quick. And again, pretty straightforward. We have down payment. And Mark, feel free to stop me if you feel like I need to explain something.
Yeah, I will.
But
I'll jump in. I'll jump in on the questions for sure.
okay, perfect. So we got our down payment, we got our fees. Typically, you have a little bit of lender and broker fees. So that's what that percentage down here is, which gives you your amount. You have due diligence, something like this. We're looking at doing environmental study and also appraisal. So there's the cost factor into that, and then also your closing costs, which is typically land transfer tax, lawyer fees, and any other additional financing costs there might be in order to acquire the building. But once that is done, that number is basically inputted the first line of the spreadsheet. So here's what gives you your total capital needed in order to complete this project. And again, this is an estimate. That number could change for the better. Most likely it won't change for the worse because we've run the numbers very conservatively. And that's why we do that, so that I'd rather be surprised in a positive way as opposed to in a negative way, right? So but in this situation, we're looking at close to $1 million in order to complete a project of this sort. And the timeline is around 18 months. Again, that's how much time the bridge loan would give you in order to completely stabilize and come back for a refinance. Because the exit strategy is to pay out the initial investors and also some of the, pay off the initial lenders and also some of the investors' initial capital, right? So going through the numbers again for the rental income. This is once the renovations are complete. And as I mentioned before, 5 of these are currently vacant, and 5 of them are tenanted. And then we have additional income of 3,000 from the basement when those 2 units are completed. Again, that number is conservative. If we can get two-bedroom units, that's going to be a lot higher. But I'm just putting 2 1 bedrooms, 1,500 each, which is pretty reasonable. Maybe a little bit on the lower side, which would give you a total of your net operating in not necessarily net, sorry, the monthly gross income, rental income for that property when it's fully stabilized. And calculations there, we have additional income. Some of the units won't have in-suite laundry, so they'll have a common laundry in the basement. That's what that income is coming from. And we have it, there's a detached garage on the property, and there's also basement storage units. Each unit will have their own storage lockers that they can rent out, and some parking spot that will be rented out as well. So that's what gives us our net operating income. And because this would be valued based on your income, they'll use a cap rate. That number could change 5%. This is pretty, that's what's the going rate right now. I know before they were a little bit lower, 4.5, and that could go up too, right? It really depends on where the interest rates are, also the bond yields at the time of refinance and evaluation. So 18 months from now, your guess is as good as mine. I don't know where it's going to be, but I'll just use a 5% cap rate to determine the value. And that brings it in at 3.7 million. So the lift in this situation would be around, so basically it's going from 2.2, you have to do some renovations to get it there, but you're increasing it to 3.7. So it's almost about $1.5 million lift. And that's just right away once the renovations are complete. Over
So can
time, it'll be worth more.
so can you explain how we're getting the like how that calculation is created for the lift?
So you take your net operating income
Yep.
and you divide it by the going cap rate in that specific area. That gives you your evaluation,
Okay.
right? Based on income. And it also depends on what kind of financing you're getting. If you get an interest rate of, sorry, the evaluation doesn't give you the interest rate doesn't give you the evaluation, but it just tells you how much of it you can actually borrow. Because even if it's worth 5 million, you cannot borrow 85% of 5 million because you have to still cover the debt service ratio. So depending on where the interest rates are in 18 months, right now they're creeping up to 5 and a quarter. Just like 2, 3 weeks ago, they were at 4.85. Recently, the bond yields went up, which causes the fixed rates to also, you know, have upward pressure. So right now, it would be definitely going up a little bit, but in 18 months, the likelihood of it staying at that rate, it's pretty high. I mean, sorry, it's pretty low. So most likely it'll be a little bit more down, right? So I'm keeping it at the same number that I ran it at 2 weeks ago. So that gives you a 1.1 debt service ratio. That's more important than the actual evaluation because we're not actually selling the building. You're going to be, holding on to it. So, you know, whether it's 4 million or five, that gain is not really realized, but it just shows you how much of a value add you got for the building, right? And that would be around 18 to 20 months because it could be faster. But again, I want to be conservative, right? You want to have enough time. If it happens sooner, I think that's even better. But it's better for you to give yourself a little bit more time, right? So I hope I answered that. Like, was there specifically something else you wanted to know about what gives you the value?
No, no, that was good. It just, it's not everybody knows, right? Like not everybody's doing the math in their head like you, Arrow. So some of us want to actually get the reasoning behind it, right?
Yeah, and also I forgot to mention the net operating income. It's calculated by subtracting the expenses. So we take our annual income. So we took our monthly rental income multiplied by 12, and then you're subtracting the annual expenses. And here's the breakdown of the actual expenses. And again, our goal here is to lower at the same time as we're trying to increase rental income, we're also trying to lower the expenses as well. So Mark, I know you have certain ways that you can, touch, maybe you could touch on that, on how you could go about lowering some of the expenses, because, things like water costs, gas, that would be on the, landlord, and the hydro would be on the tenants. So what are your suggestions, or what do you usually typically do to lower some of those costs?
So some of the stuff we'll do in the renovation side of things is we will add, smart water meters, right, to kind of like manage the water consumption. We just got introduced to a product that we're actually going to be utilizing because I have these smart water meters and like basically they get triggered by leaks, right? So if there's a leak, it'll trigger it. But there's this product that we're using now. It's a passive water flow device, I guess I'll call it. And for example, if you flush a toilet, it's going to take like 6 liters to flush it, right? You flush it twice, it's going to be 12 liters. You can set this valve to accommodate 12 liters. If 12 liters, if it goes more than 12 liters all in one like continuous flush, it will stop. And then there's a manual reset that like the tenant can just push and reset. But so if you flushed it and it just keeps going, after that 12 liters, it'll just stop regardless of anybody being there or not being there, and it won't cause a trigger, which is what the other stuff does. and it'll manually shut it off. It'll shut it off at the actual fixture. So whatever the consumption that you set up is. But there's that. We obviously have a lot of like we use like these aerators that we get custom made for various like water products that we use. Like so for our faucets, we'll have the like so there's like limits, but we will reduce the amount of water that people will use when it comes to like washing your hands in the kitchen as well as another big one. The showers we don't like. I personally don't like to go water consumption on a shower because all that's going to do, and like the women in this room could probably attest, like you need to get the shampoo and the conditioner out of your hair. And for guys it's whatever, but for girls and the ladies, like it actually takes some work because they're putting on in a lot of product, and they need to like really get the volume of water to get it out. So it actually is counterproductive sometimes if you go too like water efficient. I guess that's a big thing.
Mm-hmm.
um, Smart products or like a lot of LED stuff. LEDs, I think, is pretty standard nowadays that we use. But any energy efficient products like for the heating, we also like to use the mini split system, right? Which is we'll do the AC and the cooling in the individual units. Even if you use it as a
Mm-hmm.
supplementary, like we're doing that in a property we have in Welland. And then the goal is once everybody's using it, our boiler went down. So now what happened was it forced the tenants to kind of get used to being in control of their own heat and temperature. Like right now it's hot, so they can crank up the AC, and in as it gets colder, they're going to be able to manually adjust their heating, which means we just got to maintain that minimum requirement, right, by law, but we don't have to actually be the main source of heat for the units. So that will
Right,
reduce their
right.
consumption on a lot of the buildings.
Yeah,
And
yeah. I've seen that recently actually, where they keep the boiler at a certain temperature, and the tenants are using their own individual units to, fluctuate the heat.
yeah, we're keeping it. Yeah, we're just, it's just getting them to jump on and realize that they could use it. And these mini split systems, they're super, super efficient. Like it doesn't affect um, the electrical bill of the user like to a significant amount that it's going to be like, oh my God, I left the heat on all the way. Like it's very,
Mhm.
they're super energy efficient because Vince touched on this the last time we had him on, which was electric baseboard. Everyone thinks electric heat is expensive. So
Right.
electric
I
heat,
remember that.
like the typical old school baseboards, it has to create the heat and then keep the heat going, right? Whereas
Hmm.
the mini split system, all it's doing is moving heat from outside inside or from inside out. And that's how it creates the heating. It's not
Hmm.
creating heat, it is just taking existing heat and moving it, and that's done through the fluids, which allows it to be way, way, way more efficient than actually like it's like grabbing. I think I talked about this on the last episode, but it's like having to start a fire from scratch,
Hmm.
grabbing a
Hmm.
stick of fire and putting it in another fire pit to create more fire. It's so much easier to move fire around than it is to start one, right? Like the energy required to do it. And those are kind of like the two. Those are, anyways. Those are the big ticket items. And if we're renovating these things top to bottom, the ideal situation would be to separate the water so that each unit can be its own circuit of water, so that we could layer on watering meter systems or add sub-metering right into the building.
Right. Right. Yeah. I guess at that point it comes down to cost versus return, right? So your cost of installing them
Yeah,
versus
if
the
we're
technician you
renovating the
have to
whole thing, like while what we got a lot of the stuff open, then it just makes sense. But sometimes
hire.
you are doing renovations, but you're not going to get to all of it, and it's going to take a while, and you might not, you might put out all this effort and not actually get your
Yeah. Right.
ideal situation.
Exactly. From something like Wellington, it makes sense to do because it's from scratch anyways.
Yeah, it's skeleton, right? It's a skeleton. There's
Yep.
sticks already there. Like you now have all the opportunity to do it.
Hmm. Hmm. Okay. So yeah, so the goal was again to, increase rental income and also lower the monthly expenses. which increases your net operating income, which also increases your evaluation. So for something like this, you get a pretty good lift. The timeline is around 18 months. Cash flow is pretty decent on a monthly basis. Also depends on, if it's going to be, financed, or sorry, property managed, or if it's going to be self-managed. So that also there's some holding costs. Sorry, not holding costs, soft costs in there that's potentially not going to be there down the road. But it is included in your evaluation. In order to get to the 3.7, you have to factor in these costs, even though you might not have them on a month-to-month basis. So that gives you an extra reserves funds in case there are any capex, or just more money that could be, put back to the investor's pocket. But that part also needs to be factored in. And in this case, I don't know if you could see it down here. On once the refi is done, out of your initial investment of 920, 740,000 of that is being returned, which is roughly 80%. And depending on how many investors for that specific project, they would get a pretty good return. I mean, pretty good a chunk of their capital back with around 19%, just around, yeah, 80-20 ratio, right? 80% of your capital out, 20% still left in for the remainder of the term, which we can get into another day because that gets complicated because there are, at that point, we have to calculate the IRR, so internal rate of return. Uh, I'll leave that for another day because that could get pretty deep. But something like this, pretty straightforward. You got to just put your money in, depending on, again, how much capital is needed and also how many different investors there are. You would be able to do a project like this, and which is more of a passive investment. I just want to make sure before I share the next type of strategy. Was there any questions that there was, Mark, that I missed?
No, I think you hit them all, to be honest. Not just the only. How else are we increasing the monthly income from Henry? And then what other methods are out there? That's now we covered those items.
Okay, perfect. Okay, give me a second while I pull up the other. I feel like this one we might have more things to cover. So let me just get it ready. Give me a second. Okay. Where is... Let me know if you can see that.
Yeah, so we get to my new screen here. Scene price, purchase price. Okay. Post rental expense. Okay, so basically, yeah, okay, I can shrink it up here.
I think if you want, I can make it a little bit smaller.
No,
But
it's
no,
fine.
I think you got everything, right?
Yep, yeah, I
Everything's
got all.
showing up on the screen, right?
Yep.
Okay, nice.
I mean, just basically, I think if we just you cover the columns A to E, and then when you
Mm-hmm.
slide over, just
A
because
to
it'll be
E
out
and
of
then
payment.
slide over.
Yeah, like I can go A to E to A to F right now is what we can see on our screen. Like
Oh,
cleanly,
okay.
nice and big.
Okay, so give me a second. I'll do the same thing.
No, you didn't have to do anything. I could have just moved it.
But like, how do I move it over? I
No, like
can't.
when you
Now
add,
I can.
when you just scroll over, yeah.
Mm-hmm. I could do that. Yeah. Good. This is good.
Yeah.
Okay, perfect.
Don't worry, bro. I'm adjusting. I'm
So,
adjusting. I can basically like
Uh,
drag and shrink and open your screen while we're chatting.
nice. That's pretty cool. I just need my
Are
screen. Okay, there it is. Okay, I got it.
so
Okay.
before we go, Vince had a good question. I have my answer, but we'll see what you say. What value is there any value in installing EV chargers and charging the tenants?
Uh, good point. Uh, I don't know. Maybe if you charge more for rent, right? If you can ask for a premium because you're offering a service that uh, many other buildings probably don't have. So I
I
think
think
you can ask for a little bit more rent. So
I
if
think
that
he's
pays for your cost, then maybe.
no, I think he's asking in the sense of um like can you charge them like kind of like gasoline, right? Because that electrical will come from your property, right? You become the EV battery provider.
For your tenants, right?
Yes.
Yeah.
Yeah, I think
Yeah.
as
So
long as the numbers make sense. I don't know what the electrical going rate of charge versus um, purchase cost would be. I'm not an
mhm,
expert. Also, for those of us that are listening, Barb is in the YouTube channel, just so that she's still here, even though she's not in the Discord. You're not in the Discord, Barb.
nice.
Sorry, I digress. Go ahead, man. Go for it.
Y- You should post the link for the YouTube in here so I can share it to somebody.
Oh,
I don't know if you did that
it's
already.
right there. It's YouTube / talk about investing, but I will put it for you.
Yeah. There's too much going on here, man. I can't figure it out like that.
Yeah, I got you. I got you.
Okay. All right. So what are these numbers? So this is if you want to if you're let's say a little bit more savvy and you got some experience with renovations, you can get the right type of financing. This one don't like the numbers look really good because this is a unique scenario. Um, and I'll get to that unique scenario, but let me finish the first chain of thought, which is if you got some capital and you can do a project on your own, you can refinance on your own. You're good to get financing in terms of income and your borrowing ratio and all those things. You could also try commercial there. I know there's some commercial products out there for less than 5 units. So you can explore that option. It's more to do with the debt service ratio as opposed to just the evaluation on the property. So let's say all those things check out. You could do this on your own. This is a project that would require initially 363,000, and then 6 to 8 months later, depending on how soon you can get the permit, and we could probably ask Henry what that would look like. You would need a total of 463,000. How put it all together, that could change some of these numbers. But let's say you had a line of credit and that's what you're going to use, extract that in capital from. This is what that pro forma would look like. Um, Let me just change this back because that should not be there. There. Okay. So um, simple purchase price, asking price, purchase price, value per unit, down payment. So here's where this is a little bit unique. The person that will be purchasing this, they're going to be getting, they're going to be porting a mortgage over. So what's the situation is that they've sold one of their properties, they have that mortgage. There's still a 2-year term left on it at 1.84%. So they've decided not to break that mortgage, keep that mortgage, port it over to another property. In case this one, they have about 60 days, I believe. If there's any mortgage brokers in the chat, correct me if I'm wrong. You have about 30 to 60 days in order to still port that mortgage over after the sale of your property, which initially had the mortgage. So that's what's happening here. That's why you see the interest rate at that 1.84. I can't believe that's where they were maybe like 14, 15 months ago, maybe a little bit more actually, maybe like 18 months ago. Um, Seems unreal, but that's what it was, and they're going to take advantage of it. Which means once you renovate, so the plan, it's again, we've been so used to getting some of those 1 year burrs where you all your capital out in 6 to 8 months, moving on to another project. I don't think you should have that expectations right now and have a little bit more longer, outlook for your investment. So that's why I'm presenting it in this way, because at the end of the day, if you have a long-term outlook, you'll definitely win in real estate, and it is an asset that is in demand. It's tangible, so it makes sense to put your money into it. So initially, when you purchase, the plan is to renovate the existing 2 units, rent them out, apply for the basement permit to complete the triplex, and then also refinance when that term is over. In this case, it ends in 2025. So at that point, you would refinance and then potentially sell in 2026. All given that the real estate market hasn't totally completely crashed. Again, I cannot predict what's going to happen in 2026. But if we look back the last 5 years, we kind of have an idea where things would be going, and that's what these numbers are based on. And I could be wrong. So if the market crashes, don't blame me. It's not my fault. I don't know the future, but I can project certain things that we can take from previous years and have a pretty well educated guess. So I'll just jump over on this side. Once the units are rented, we have our monthly expenses. In this case, hydro, water, gas, insurance, property tax, a little bit of maintenance, and some vacancy. So after you have the 2 units rented out, which are the main floor and second floor units, and obviously you're keeping this initial mortgage for the 2 years of the term that's left, that'll give you a cash flow of around 1,400 a month. So 2 units rented, you're working on the basement, you're getting the permit, and while you're doing that, you're getting $1,400 positive cash flow per month, which sounds really good right now because most people are not cash flowing. And in order to do that, you would have to spend around 100,000 to improve the current units. It's very cosmetic. Mark, what do you think? 50 grand a unit seems reasonable for cosmetic renos?
I guess depends on square footage, but even like at 50 grand, I would say that's maybe on the high side, right? From cosmetic side, like I would say less, right? But it depends
The
on.
units are pretty good size. They're about 2 bedroom. One of them is a 2 bedroom. The other one's actually a 3 bedroom, um, with an option to make it a 4 bedroom. So you do have that option. Maybe that would cost a little bit more, but just as a 3 bedroom, you'd be getting around that type of rent
Yeah, and
in
are you
downtown
going to
Hamilton.
be and like for the renos, are you going to be like demoing anything, or is it just like paint, new
No,
floors, new kitchen, new
yeah,
bathroom?
yeah,
Yeah, I'd
yep,
say you're
yep.
gonna be like if you're not adding like laundry or any of that sort of stuff, yeah, you're not I don't think you should be hitting 50. That's way too high. I would say you'd be
Okay.
closer to like
You do need to add in-suite laundry, yeah. So yeah, I think I have that broken down here, somewhere around
okay,
there. So
there you go. Windows. Yeah, windows are gonna be expensive too. I'd
expensive,
say you're
yeah.
gonna be like high 30s would be my guess. High 30s, maybe like low 40s. I think
Okay.
closer to the high 30s though.
Yeah, so like even for me, I would say um it's on the higher side, but again, I want to be
Conservative, right? What?
conservative. I want to make sure that you're surprised on the positive side, not necessarily on the negative side. Um, and again, I think also depends on what happened, who you get to do the work, right?
No, Trami Road Arrow is high maintenance. I fucking love it.
I mean,
Sorry, sorry. She
what
killed
can I
me. She
say?
killed me. She killed me.
What can I say?
Sorry.
Yeah, so given those, um, you renovate to that extent, you'd be getting those type of rents. And again, just wanted to go back to the cash flow. You're going to cash flow around $1,400 a month right now in this situation, right? But so let's say you're somebody like somebody that has maybe a property out there and you're thinking about selling it, but you have a good mortgage, you should do this because you're taking advantage of the fact that the prices have come down because the rates are so high, but you still have a rate that's really low. I would say you should definitely take advantage of that. These guys are, so I don't know why you wouldn't. So that's why I'm presenting this opportunity. And okay, so continuing on, once you've completed the 2 units, that's roughly your evaluation right away. Okay, so that kind of breaks down your immediate returns. But the plan isn't to sell it or refinance right now. The plan is to hold on to it, get the permit for the triplex, finish that, and then refinance when the term is over, right? So I'll jump over to the future value. Okay, can you see that okay?
Yep.
All right, so future refinance value, we're looking at 115 because properties in this neighborhood, when the market was crazy, the highest one I've seen sell for 1325. So triplex, similar size, same neighborhood, sold for 1.325. Obviously, I think those days are long gone, and the likelihood of you getting that price probably not going to happen. I could be wrong, but I can say, given the size, we are most likely going to refinance around 1150. Okay. Um, and so my goal in that process is to always look out for comps. What I personally do is I'm always looking for sales that have happened, so I can figure out. Come by Catherine from not in this market, maybe like 2 3 years or maybe 2 years ago. Um, but 135, no way for a triplex. I think that's a bigger property, so possibly fifth. Yeah, so that's a bigger property. So maybe you never know. So if that's going for that price, I think a triplex you should definitely be able to get um, that. I think it also uh, I think it also depends on the income you're generating. I see too many times where you got a triplex, fourplex, or even a fiveplex, but the income is really low. So nobody's gonna buy that for a really high price. But in this case, your income is going to be high. You're going to be bringing in around 6,300 per month, and you're cash flowing at that time. Interest rates, again, this is just my guess. 18 months from now, not 18 months, 2 years from now, so 2025. Um, Hopefully, it goes down to 4% or even lower. But if it does, this is what your cash flow will look like. And then let's say you decided to sell it um, the next year. This is what your returns look like, which are pretty great because you've refinanced. You got back, most of your money. You have 33,000 left in the deal, and you're positive cash flow. So 2025. So you're at 23, 22, 24, 20, 24, 25. Yeah. So 25. So it's a 2 year play basically,
And
right?
do you have the total investment for everything that you're going to require?
So year one,
Hmm.
before you obtain your permit, you're gonna need around 363,000.
Okay.
Once you get the permit, that's where you're renovating the basement into the third unit. That's another 100K. So at that point, you'll need another 100,000. So which brings your total to 463,
So,
close to 464.
question.
Yeah,
What is the height in the basement?
611. So when I put my hand up, we have full clearance.
Okay, so you got the good height.
Hmm.
So why wait for the basement permit? Or you're just doing that kind of like you're going to put it in, but you're going to start renovating at the same time?
Well, I would say it depends on how long it takes to get the permit, right? If the permit's going to take 4 to 6 months, I'd rather finish the upstairs units and get some cash flow going, as I'm waiting for that permit to be issued. Does that make sense?
Yeah. Yeah, like I mean, I would
Mhm.
definitely start the basement right away.
When you say start, what do you mean? Running like some of the infrastructure?
I would do everything in the basement. I mean, as long as you submit the paperwork. Now, some people in this room could correct me if I'm wrong, but I would submit the paperwork for the permit so that we know what we have to build. And then I would
Mm-hmm.
start the renovation process, and then just really document it well because you can get engineer sign-offs to cover off a lot of the city requirement.
Yeah.
Right?
Yeah. I
Presuming
mean,
presuming the
whatever,
city doesn't
whatever.
like ask you anything crazy like the one we just did in at East 20th. Outside of that, I think you should be pretty good. Remember like East 50th where we had to do two separate drains.
Yeah,
Like
yeah,
I would
yeah,
now
yeah,
do
yeah.
two separate drains because of that potential, as part of my plan. But definitely you could
Mm-hmm.
frame the walls, do the exterior, start the fire separation, get the electrical done, and then hopefully you'll be 3 to 4 weeks already in, and hopefully we're running side by side from the permit, and either we can just get the inspector in, and there's going to be like, hey, I know it's day one of the renovation, but we've gotten a lot done. We're super fast renovators, or here's a bunch of letters to cover off, right?
Mm-hmm.
To
Mm-hmm.
not delay that
No, I
work.
mean, anything you can do to speed up the process is always ideal, right? So that way you're generating more income, your holding costs are less. I mean, in this case, you're going to be positive cash flow anyways, but why not get more, right?
100%.
Um,
And
but
could
yeah,
you get a
man, that's
fourth unit in this area,
you can,
like an
but
ADU or
then uh,
an attic?
you could do an ADU, but there is a, oh, you know what? This might work actually because there is a garage there too, but I didn't know if it was in good shape, so I didn't really explore that option. But if it's in good shape, you could probably do an ADU as well. You could also utilize the attic and make that the fourth. Um, but then you got to do a fire escape, and I don't know. Then I think that just the cost starts to become a lot more than what the return you'd be getting. I haven't looked into it, but again, there is some additional value add opportunities. Just, but I wanted to keep it bare minimum at least, right?
Hmm?
Keep it simple. So yeah,
And then
that's what I got.
between the two deals, like what do you think the value prop for both? Like they're different deals, right? They both have
Hmm.
some positive cash flow. I don't know. Like what?
Yeah, I mean, it's all it's more so the actual capabilities, like your own capabilities, right? If you can handle a project like that, you can if you can manage it, um, manage the process, working with the designers and the contractors and getting the permit, um, completing the renovations, and then obviously renting it out, then I would say the second option is going to yield you a better return, but you have to put in some sweat equity yourself, right? And by sweat equity, I don't mean you have to do the construction, but you actually have to do the work and get things, put everything together essentially. Whereas the other one is very hands off, it's passive.
Right. Henry's got a question there for you. Does it? Uh-oh.
Passive cash requirement is less. Does it make more sense to do a second story addition? Mm, for a bungalow, I didn't get that part.
Yeah, are you talking about the same property or is this a different property? I don't even know. Oh, I
Um,
see what you're saying. I think, okay, so if I think what you're asking is it better to add like an addition to create another unit, or is it better to add an
for the
ADU
fourth unit.
to create another unit? Doesn't matter what is that the income that they take off of the ADU is not valued the same as part of the building,
Correct.
right?
Also, the
I think
square
it's
footage is not factored in either.
yeah. So that I think
So if you
would
add
be
an addition, that's 1,000 square feet to your existing 3,000 square feet home, they'll say it's 4,000 square feet. But if you just did an ADU, that's not counted. So you still have a 3,000 square feet home.
Okay, let's hear it. Let's hear it, REI boss mom. What's the answer from an
Let's hear it
appraisal
from the appraiser.
standpoint? Let's hear it from the appraiser, former appraiser. Come on, guys, this is killing me. How do I speak?
How do you
Oh,
want?
okay, let's get you up here 1 second. There, you should be able to accept that invite now. No, you don't have to go on video. You can just go on your mic. It'll just put your icon on there. You don't have to turn on your video. You can just ask to speak and it'll just be your microphone. Now who's high maintenance?
Jeez.
I don't know.
Oh, if you're on your phone, this might be the phone thing. Remember, I was telling
But you're on your phone, you gotta double tap it.
you.
We'll just move on. You're gonna have to type it. You're gonna have to type it.
Does this work?
Hello?
Oh, there we go.
Can
You're
you hear me?
on.
Hear me?
Yes, we can.
Hey, what's up, guys? It's all
What,
right, boss mom.
what's up, Trammy?
Okay, so I have a question about the appraisals. AUD. Okay, so it really comes down to highest and best use, guys. Okay, because appraisers are hated by our industry, right, Errol? We always come in here, tell you what the value is, and then you hate our values, so that's why we're hiding all the time.
To be honest with you, I love my appraiser. She always gives us the best values, and I'm pretty sure a lot of the investors out there know who I'm talking about. That I'll just
That's
leave it
only
at that.
one. What about the other ones? I'm just
Oh,
kidding.
I don't
Okay,
work with
so
the I don't work with.
residential properties are less than 4 units, the direct comparison approach. And then there's the cost approach, right? So with ADUs, which are like, are you talking about like garden suites?
Yep, yeah, the garden suites.
Okay, so the garden suites, those are a little bit hard to capture in terms of resale value because it's based on direct comparison approach, and you're looking at comparables. And because it's a newer product or a newer design, um, you're not going to be able to find comparable sales. I mean, as we move on in terms of like, moving forward, we're probably going to see more of that and more resales value.
Hmm.
Um, the appraisers are able to capture that, but for now, it's more like a based on a cost approach, and um, at the end of the day, it's what is the property. I just want to look at like if that property owner were to default on that mortgage as of today, what would be the resale value? What can they recapture? Ultimately looking for market value, current market value,
So
and
the
current market value. Um, Sorry, what was that?
no, I was gonna say so basically you're like to generalize the ADUs, even though like even if because it's a new product and that stuff, it would be better to do the addition for because then you can do compare you have more comparables. You have more data to work off of, right? From an appraisal perspective.
Yeah, from an appraisal perspective, you're capturing value based on data, which is usually 30 days or 90 days, depending on what the market conditions are. Typically, you're trying to capture the same market conditions as to today's market value. But that doesn't necessarily mean that um, the market value isn't there. example, um, when I think Errol kind of knows about this one too. When I did a transaction with him, I did one down by Stinson, and it was funny. Like I got an appraisal for like seven something, and then from the bank, and then I ended up selling it for like $1,075,000. So, um, I
By
don't even know if
certain
this was an
incentives.
appraisal question. I'm sorry, guys. I don't even know if I'm answering the question. I'm just rambling right now.
No, I think you definitely got the point, which is
Dang, you did.
the the lack of comparables. So let's say next year, all of a sudden, we have a bunch of sales that are triplexes with a ADU or a garden suite, and they're selling for 1.2 million. It'll be much appraisal to evaluate your property for 1.2 million. But since we don't have those comparables, it's very hard for them to justify you can't just be like, well, that triplex sold for 1 million, and I have a triplex and I have the ADU or garden suite, I should be 1.2. They'll only give you what your cost was to build that ADU. So let's say the cost to build it was 100,000. They'll give you that cost, which is the cost approach, which we're referring to. So yeah, I think you got both points.
Yeah, so yeah, ultimately, like, the appraisal value is based on what the appraiser can capture from a data standpoint, right? So, it's not always gonna be keeping up with current market conditions, or even like if the market's going up and there's a lot of demand, prices are going up, they're not capturing future values or even sometimes current market value, ironically. I mean, ideally, you're supposed to capture current market value as of the date of the appraisal. But that's kind of hard to do when you have a newer product, right? So, ultimately, you want to capture what the current market value is, and sometimes it's like, okay, like the direct comparison approach, you take something that's similar. Let's say if it's like, okay, it's 4 units, and then which I don't want to get too technical, but yeah. Anyways, so it's either the cost
Thanks,
approach or direct comparison.
thanks, Jeremy. We appreciate the good info. It's good to hear it from the horse's mouth sometimes.
Horse?
It's the
Is it only a
saying,
horse?
man. Oh my God.
Oh my gosh.
It's a
Oh
saying,
God.
okay? Okay, thanks, Jeremy.
Okay. What were we saying about? Yeah. So I think um, even for I wonder now that we talked about it, I wonder if the 10 unit does have a garage. Can you build? No, I think we talked about it. Henry, you said you can't build on it. Never mind.
We'd have to sever the lot.
Yeah. Because it's kind of like a off to the side.
I see. I mean, it wouldn't. I think it'd be worthwhile to sever the lot, right? Like you would want to do that, I think, um, because
It's an
you're already
option.
going to be cash flowing and the building stabilized, right? Like I wouldn't take on the
True.
severance during,
Yeah, it's not a bad idea actually.
right?
Yeah.
Like once we stabilize, like what's like what's the cost really at the end of the day to be able to get more units out of it potentially.
Mhm. It's good. In theory, if you severed it, you could build like more, more than just 2 or 3 units. If you severed it and you made, let's say, you added an addition onto it and a second story, you could do another multifamily there. It's just the parking requirement, you would have to get a variance, right?
Yeah. Can we make a 4 unit a 5 unit? Many, yes, of course you can. You can make a 12 unit and 18 unit. Just can you fit it? And also
The zoning.
The zoning, yeah, can the zoning support it? That's probably going to be your biggest hurdle because zoning, and then you're going to hit the parking. Those are going to be the two like first hurdles that are going to hit you in the face before the renovations hit you.
You've got to
Non-conformity.
have.
I mean, you can do anything with non-conforming really at the end of the day because it's not non-conforming. I mean, if you want to legalize it, then you're going to hit those hurdles.
So I think the best thing that you could do in order to get a, really concrete answer is when you apply for a zoning verification, you can put in your proposed use, right? So let's say if you're applying for, let's say currently it's a 3 unit or a 4 unit in this case, uh, in the proposed use section, you could type in 5 units or 6 units, and they'll respond back saying if they will allow that, and if um, or if they won't, or if they'll say you'd have to apply for a rezoning if they won't allow it, but if they would allow it, they'll say the zoning bylaw does allow for 5 units, but you'd have to get a permit.
Yeah, I think like for me, we just get Henry to do run that legwork or an architect, right? Like that's the legwork that you want these guys to do. Is they're gonna go like Henry. Thankfully, is on our team. He is our go getter. He's driving to every city and like banging on the doors to get us the answers that we need for the stuff that we're trying to do, which is super
Hmm.
helpful. But that's who you need, right? Like you need that guy on your team to be able to get that because you get the verification, but they'll be able to kind of like sift through the answers and fight back or have a good understanding if there is a opportunity to win, 5 units. Man, he really wants
You
that
know,
5 units
you, you know what would be great if we can get somebody from the city. Um,
on here.
well, I'm asking for Hamilton, but I guess from every city, if we can get somebody from the actual city department be a part of this Discord, that'd be pretty good. I'd like that.
I mean, I can knock on some doors. I can knock on some doors.
Yeah, if you can find somebody in Hamilton, that'd be
I know a guy in Mississauga that is currently doing permits for a client in Hamilton and is absolutely baffled with the crazy
Oh, I know who
requirements.
you're talking about. I know who you're talking about. Oh, that's funny.
So
Um,
there's that.
you know what? I noticed sometimes, I don't know if it's a Henry, maybe chime in. I don't know if it's a designer thing, but um, sometimes they feel like they know, well, maybe they do, right? Maybe
No,
there's a reason for it. But what I found is that they're like fighting with the person at the city, which is costing the homeowner because nothing's getting done and you're just paying more for your holding cost. So I don't know what it is that and why they have that kind of like let's work together and get this done, right? As opposed to no, this is how it should be. And they come back, no, we want you to do it this way, and they fight back and say, no, this is the building code, right? I'm
well, the
just like,
problem,
why can't you just
no,
get along and just get this done?
the problems, yeah, that's exactly what I was going to say, what Henry just wrote. It's because of interpretation, right? You read something, right? Like the
Hmm.
street can have 5 parking spots. And then there's like another passage in the same book that's going to say max parking 4 spots. So who's right?
Hmm.
Which one's right? Which one layers over top of another one? And at the end of the day, it's the city worker on on the line that's going to choose, right? So this is kind of where you get into this. It's always like interpretation. So the argument is always like someone's perspective of like how they read something, right? You could read things one way and interpret it a certain way.
Hmm.
And like, let's take the horse's mouth, for example, right? I said that, Trammy interpreted it a certain way, but I said it because of a saying, right? Like it's just interpretation, right?
Yeah, yeah, yeah.
And that's what it is with the code, right? Like when they're dealing with it. So it's a bunch of I'm gonna call them nerds, like arguing, who read the passage the most correctly.
Speaking of nerds talking, I spoke to your brother today. That was a
my my
very
brother.
funny. but yeah, uh, we're both talking like this in the same kind of like tonality. But I was like,
Yeah,
oh, now I know what Mark meant when you said that
that's
you
cool.
guys are nerds. Um, but nah, he's a cool guy. I like it. Just he sounds just like you, but different tonality.
Yeah, he's more calm and collected. I'm the crazy wild one.
Yeah, yeah. I wouldn't. I couldn't see him wearing a taco hat.
No, 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 no. He's not. He's definitely not. He's definitely the quiet. He's the guy that keeps me from jumping, you know?
Nice. That's good.
My younger brother, he's crazier than I am. Hector.
Actor.
Hector's the wild
But
one. He's he's
nice.
he's too wild, you know? He loves to take the line and really push it, whatever we're doing.
Makes you look makes you look normal.
No,
Or
yes, in some circumstances, yes, but he tends to be a little more shy until he gets comfortable, and so it takes him a lot longer to get out of his bubble. Where I could just
mm,
show up at a room and I'll wear this hat and I'll be like, "Let's go, let's meet everybody, let's talk to everybody," you know.
nice.
What's
Nice.
Henry saying here? I want to save money, but the city's like, well, here's how I see it. Yeah.
Um, and then he said something else too. Has anyone seen the numbers for a 1 to 5 unit conversion yet? Like the
Appraisal?
number? So are you looking for the value after the fact it's done, or
Yeah, I don't know. I don't know. You got to be more specific with this question, Henry, if you want to. Yeah, he's looking for the after it's done.
um, depends on the income. If you're getting, because I think, well, I guess I think some lenders will do five as residential, but I think most lenders will consider it to be commercial and financing wise, and you would need to meet the debt service ratios and things like that. But it really depends on the income. You've got to see how much the rental income is for the 5 units. You know, if the units are all five bachelors, then it's not going to be very good. But if you have a mix of 2 bedrooms and 1 bedrooms, I think you'll get a pretty good evaluation.
These guys are clowning around over here. It's hilarious though.
Horse, yeah, nice. I
Um,
hope that answers your questions. But you know what? We could do a simple calculation. I mean, we're actually past time, but it's pretty easy. You take your income and you divide it by the cap rate. So let's say here, I'll just do it on my computer or phone really quickly. Let's say you're getting five five units, right? So let's say they're all 2 bedroom units, let's say, right? You got a pretty good deal. So and you're getting 2 grand per unit times five, that's 10,000. Let's just assume 30% of his expenses. So we're gonna go 7,000 times by 12 divided by 5. So the evaluation that you'd be getting is 1,680,000. But now let's say instead of 5 2 bedrooms, you got, 5 1 bedrooms, and you're renting those out at 1,700 per unit. Same thing. No, that didn't come out right. So we got 1,700 times 1.4 million 228,000. So that's a difference of, you know, 250,000
and what was the original purchase price that you put on there?
for the 5 unit. I didn't put a purchase price.
No, but like the one bedroom, like the one unit. What was the one unit
Um,
purchased at?
rents
No, because you're going from 1 to 5, right?
1 to 5.
So what did I
I
buy the
didn't do
building
like
for?
the, yeah, I don't know. I don't know what. I'm just saying what the value would be once you have 5 units rented out.
I see. Right, because like, what would you buy? Well, what would you buy a one bedroom for in like a one like a single family home in like 700? You think you'd go seven?
Hmm.
So you're like almost doubling the
Well,
value?
no, if you're doing 5 units, it's got to be a big house, right?
Yeah,
So if it's a big house and good zoning, which means it's in a pretty decent neighborhood,
it'd be a million,
I would say
1.2.
you're probably at a million at
Yeah, so
least.
a million.
Maybe more.
So yeah, see, so I think like at that, I don't think it would even be worth the
No,
purchase, right? Because you're gonna blow through that in the
no.
renos.
That's the thing. Like you know how, there's a lot of these talks about, new zoning and you can put 4 units, maybe even 5 units. It's like, okay, sure. What's the cost to do that, right? Like you're taking a single family home and you're going to turn it into a fourplex. What is it really going to cost you to do that? If it
Yeah, man,
costs you, 500,000, let's just say, just a random number, or even say 400,000. I don't know. You tell me. Tell me what it would cost you.
no, man, I think at the end of the day, like it's just not worth it. It's honestly just not worth it, even for myself, right? Like I own a renovation company, right? I'm gonna get it
Hmm.
as cheap as possible. It's still not worth
Hmm.
it for me to go buy a single family home and convert it. It's not worth it.
Yeah.
It's just not worth it. The value isn't there. It's kind of like you're just tying up the money. I'd rather do a 10plex, an eightplex, you know, and any plex plus, right? Really at the end of the day, to get the value, I think if I'm gonna do single family homes and like buy and hold just for cash flow, I'm gonna go out east. Like hands down, I'm
Right.
gonna go out east,
Or
right?
in the
Or
States, I know a couple of people, they're
yeah, the
buying
states is
like in
the states is pretty
Texas.
good. Yeah, Texas,
Yeah.
Tennessee, that whole little
Yeah.
like there's like a little triangle there of places to purchase. But even that, like, I think the only way it works here now for me personally would be to do midterm rentals or short term. But short term, there's like a lot of rules on the short term, so midterm is kind of like that loophole, I guess. But
Yeah.
it's for how
But to
long?
be honest, in a building that is multifamily and you don't have much neighbors around you, and you have a mix of different units within your building, you could definitely do Airbnb. The only way I plan to, right? So I'm not saying like this is what you should do, but this is what I plan to do because the only way that the city would really figure out that you're doing it if you're in a city where it doesn't allow it is if somebody complains. I don't think the bylaw officers are going to be looking through Airbnb website and trying to like catch because it doesn't even give you the
No,
address, right? So
yeah, you'd have to
that's
get
not what they're going to
reported.
be doing.
Yeah, no, you have to get reported.
Somebody has to complain,
Yeah.
right?
Would have to be a direct
So
report.
yeah, so in that situation, I'm definitely willing to take that risk and rent it out in short term because I see the demand for it. If I didn't see the demand wasn't there, I would say yeah, it's not a good idea. But the demand's definitely there, so why not get additional cash flow? So
Uh,
I would definitely take advantage of that.
yeah. Do you see this unicorn jumping jumping around on the
Who's that?
screen in the
Who's
chat?
the unicorn?
There's a
Who's the
unicorn.
unicorn?
It's a GIF that Grammy posted, and it's basically a unicorn
That's
swinging around on a stripper pole, and it breaks and it falls, and I'm just watching it fall over and over and over again because it just keeps repeating, so I'm dying. Um, yeah, no, I think it's not worth it, right? And even the midterm stuff, that's just like a short term solution or a fix. Like I would do midterms right now to cash flow and kind of help myself get out of a property and move into the bigger
Mm,
properties because I think a lot of these rules and restrictions is to help push the money outward into developments or bigger products, right? Like they don't want,
mhm.
there's not enough, um, I guess there's not enough housing in everybody doing duplexes and triplexes. There's not enough.
Yeah,
We
I
need
think
people.
those single family homes, they want them to be for actual families, right? They don't want them to be as hotels potentially.
Yeah, they don't want them to be as hotels. I think they do it to allow for the model of like, I gotta move in with my parents to purchase my first home. right? That
Mm.
scenario makes sense, and that's like why a duplex would work, or like that, splitting up a house would work. But I
Mm.
think it's gotten out of control. Obviously, investors have taken great advantage. But I think that, like, the governments are putting a cinch on that, so you're not going to be able to do the same, right? I think, like, Ping, we're going to be on with Ping tomorrow. We were chatting about it last week, or I think the week before, like how he flips, but now he flips the main floor, like really high end, like you would normally do a flip, and then he'll do
Mm-hmm.
like a secondary suite or a nanny suite, like ready to go for a duplex conversion. So now it's that younger family moving in up top with their parents, or some other or potential to like house hack. And
Yeah.
that makes sense. I
Yeah.
feel like that market is tremendous out there right now, right? I think there's lots of people seeking that space.
Yeah, and I wouldn't even like you don't necessarily need even to like finish the kitchen and like put it in there. As long as like the rough things are roughed in, because a lot of them will go and they'd be like, oh, all the infrastructure is there. I could do it myself, right?
Yep.
So you save on the cost of not having to put in a kitchen, but then you kind of still get the benefit of reselling it at a higher price.
How much does it cost to duplex to you guys? Just a question from Manny. That's like a very general, broad question. That's like saying how much does a house cost? It's not
Yeah.
right. Like, yeah, I need to have more context. The basement's finished, unfinished. Do I have enough power?
900 square feet.
Right? Like, there's lots to it. I would say in the basement you're gonna be probably like 100K if it's unfinished, and then the main floor, I don't know, anywhere between like 30 to 80K depending on how bad it is. That's my
So
guess.
you're around 130,000 roughly.
Yeah, you're gonna be like 130 to 180, I would say. Depending, like, I don't know, are we
180,
doing
yeah.
right? Like, are you gonna waterproof? Are you not gonna waterproof? Like, there's so many kind of like variables when it comes to this stuff. Like, that's why for me, when people ask me for quotes, I'm like, look, if you want me to give you a per square foot quote, I'm just going to give you a number. And at the end of the day, it's going to be meaningless because until I have the drawing in hand, what is the mechanical requirement? Then at that point, we can start maneuvering your budget. But until then, it's just a big guess. And I'm going to guess in my favor, right? In my favor, like maliciously. So I'm going to give you like such a great price that you're going to want to work with me, or I'm going to give you what I think the price is, so that when I give you my number is going to be the same or lower, right? So at the end of the day, that people asking for prices, and I get drawings sent to me all the time. It's just not worth it until you actually have drawings, right? Like, you could estimate
Hmm.
that, but it's a big guess, right? Like $1 a square foot flooring, or $3 a square foot flooring, that's triple the cost just in flooring.
You think it would be beneficial for I don't know, maybe some of our members to have, let's say, we do like a rundown on um like prices, rental prices, like cost, how to budget for renovations.
Yeah, actually, I'm working on something with a couple of other guys. One is for wholesalers to
Hmm.
be able to create like a reno per square foot price based on some certain items, because they're going to typically go and see the place, or at least have been there, right? Like seen it on the MLS or wherever they're getting the deal from, or have walked into the property.
Hmm.
um, and I'm gonna come up with, there's like some stuff that has certain, like, you can't, like, square footage overall isn't accurate. It's like square footage of, like, flooring and painting, that is pretty fair. Like, it's not gonna change too much, right? Your square footage in your kitchen could change drastically, whether you're putting quartz, not quartz, the type of kitchen, right? So that you could have a range. And then like bathrooms, I have a pretty fixed price on a bathroom, from what like I would typically do, right? Like a tub, shower, toilet, like a three-piece and a two-piece, you're gonna have kind of a set cost for the most part. Bathrooms don't really change in size. Like, the average bathroom is 5 by 7. Like, I would say 90% of the bathrooms are 5 by 7. The Sonopan
Mm.
green product worth the cost. I think I mean, it's a sound dampening product, um, but it is a little costly. They do lots of marketing around it. The only thing I don't like about Sonopan is that it adds to your surface, right? You got to put it on the floor, which is going to add an inch, or you got to put it behind the drywall against the studs, which is also going to add an inch. So you're taking away space in order to create sound proofing, where like Roxol and all that stuff will just go in between the joists, right? And is it a good product? Yes, because it's a continuous like wall, I guess, of green product, right? Like so there's no break in the sound, but I don't know, unless you're doing like some crazy sound room or like a hotel or something like that where it's really gonna matter for the sound. I don't think it's worth the cost.
Sonopan
Yeah, the Sonopan.
makes sense. All right, cool.
Yeah, I think we
think
should do we should do a numbers thing. We should run down the numbers on different stuff.
I think that would be helpful, especially even for some of the like I'm always, you know, coming to you about like, hey, like triplex, how much? Um,
Yeah.
it'd be
So like I
easier
said,
to
I'm
just like
trying
have
to I'm gonna build but see this is kind of like you gotta be careful. Oh man, I should show you something. I don't know if I should show you.
what is it?
I'm gonna show you. I'm gonna show you. Hold on. Okay, let me find it. One second. One second. Let's keep talking.
Is there another question? See, how much for bathroom? Four piece? Four piece. I don't know. 6,500? How does that sound, Mark?
6,500.
6,500 for a bathroom.
I think that's cheap. Wait, am I buying the materials? You're buying the materials?
Uh, I mean, I guess depends. Are you gutting the bathroom or just changing out the vanity, toilet, tub? Gutting. Yeah, gutting's probably gonna be more. What about the pipes? Leaving the pipes or
This. Look at this. Look at this I saw.
fix and flip? What is this? Let's see.
This is the fix and flip repair calculator. I don't know if we can see it. Oh yeah, it's on the screen. It is like honestly the most fucked up thing ever. 2023 edition. This is from the States, but like if you're running your numbers on easy needs work or wow this is bad, and then the square footage is just going up in $10,000 increments, like who actually did this work? You know what I mean?
That's the guy who did that. I saw a news article. Was it news? I can't remember what it was, but I think it was on TV actually. Um, they the couple, I think they're in Oakville or somewhere, Milton or something, and they're like living in their car because the contractor ran away with the money.
Oh, yeah,
That
no,
guy,
for sure.
that
But like,
photo.
but this is a fix and flip calculator that I saw that's being passed around to investors as like this is your guide of how you should budget for renos, which is why renos is so fucked up. I'm not even talking about the price. Who cares what number is in that box? What is easy? What is an easy reno? What is a needs work reno? And what is wow, this is bad? That is not like an accurate description of like how reno costs should be, right? I would say, you know, the easiest thing would be like, you would do it by job or by task is how I would build this, and I can maybe build one. Would be like paint, right? You could have a square foot for paint. You could have a square foot for flooring. You would have like a, linear foot for kitchen, right? It's going to give you a good guess, and then you would have like per fixture um like plumbing fixture, right? If you're going to do, there's like a price to rough in and finish, and then there's just a price to finish, like plumbing fixtures. and the electrical, it would be per fixture. It's per fixture. My electrician, all the electricians charge you per fixture. And then you're going to run into other layers like, do you upgrade the panel? Do you have to upgrade the water line? Are the drains enough? And there's more other layers. But this is like, there's not a chance if you use this fucking to manage your renos, you're like, there's no way you're going to be able, you're not going to come in on budget. You're going to be out of whack. This is not like easy is too broad of a choice of a word, which is where I think investors get really screwed up all the time. Because they're just like, yeah, just put 20 grand, 30 grand, you'll be fine. Or yeah,
Mm-hmm.
GC cost plus 30%, right? Like call some. You know what I'm gonna do? I'm gonna start calling. This is what we're gonna do. We're gonna go live and we're gonna call some contractors and I'm gonna pull numbers from contractors to
We're
price
gonna
jump.
get quotes live.
Quotes live, like how to get the quotes live, and then like what questions we should be asking, right? Because the guy's
Nice.
not going to give me the right price, and then which ones are like I'll be able to hang up and be like, this guy was shady, and here's why he was shady. Because they're going to say some stuff that I'm going to be like, yeah, you have no idea what you're doing. Like
Hmm.
one client that I called, I'm not going to tell you who, but they not client, sorry, a trade. I called them. I was like, hey man, I need some help with this. Would you want to come out and take a look at this project? And he was like, do you have a budget? And I was like, no, I don't have a budget. I'm asking you to fix this problem for me. And then they were like, okay, our minimum budget is 25K. I was like, okay. And they're like, okay, so our minimum budget is 25K. And then I was like, okay, that sounds good. And then they're like, is that within your budget? And I was like, just come look at the goddamn job. Like I could tell you yes, but like, that to me is like those are red flags for me.
Mm-hmm. Yeah.
Guys can give you price over the phone, Manny. I don't think you can't not give a price over the phone. I can give you a price over the phone. I'm giving you a price live right now on bathrooms and stuff like that. If you're good and you know. The full job? No, not a chance. I need drawings. I don't even give price in general on full jobs. I
Mm-hmm.
said, give me the drawings. If you don't give me the drawings, I can't give you a price. Because you want to be accurate. You don't want to have a terrible, terrible thing.
Mm.
But okay, I think we're over time. We're way over time. But this is
Yep.
good.
This is
Manny, when are
good. A
you
little bit
gonna?
later. I think
You know,
we got some more more engagement because the timings. I think we should do a poll. I think we should do a poll and figure out what time works best for most people.
okay.
But I feel like 7 o'clock was pretty good.
Yeah, 7 or even 7:30 is not bad. If we did 7:30 to 8:30, isn't too bad. That way, people who have
Mm-hmm.
smaller kids can kind of get all that wrapped up. All they got to do is be like, go to your room, read, or go to sleep, kind of thing. But yeah,
Yep.
we're gonna be live tomorrow with Ping. If anybody wants to join us, we're gonna talk about underpinning tomorrow. That was the topic I picked.
Oh, nice.
I didn't even
Nice.
discuss with him, so I'm just gonna throw it at him. So he's pretty good
I'll
though.
I'll try to find my underpinning video for that one
Um, yeah, I
then.
got
Some
I got
views.
I got underpinning, and then what else? I don't know. Yeah, I think Manny said he's gonna come and talk on Fridays or Mondays. Putting him on the spot
Nice.
to get him up there. And then I think Henry does architects on Friday, correct? Henry, I think he does lives on Fridays.
Yes, sir.
There you go. Manny's gonna do it. Yeah, and then yeah, like I think as we kind of keep going on here, anybody that wants to speak in the audience, I would love to, put together a good panel and do a day where you could kind of just pick everyone's brain. I mean, we got a lot of good people in here. And then, if you have any burning questions or you're going through a project right now or whatever it is, like you can just get our opinions really at the end of the day. It's nothing it's like networking, right? It's like networking and asking people different struggles that you've gone through, especially like I know Arrow has tons of experience. Henry's obviously an architect. I have a lot of renovation experience. Manny's done a lot of duplex conversions. Elevator Bill, He does elevators. Elevator Bill, I think we should get you on here. I don't know if you're listening or not, but I think Elevator Bill does elevator repairs. He's an elevator
Right.
technician. Feel like
Nice.
it's a topic that we should be talking about, especially if we're gonna move into the buildings.
Yeah, I think it's required when you have what, 4 stories and more?
Yeah, 4 stories or more. No, there's not three elevator guys, Henry. How the hell do you think all the elevators get fucking serviced? What are you? He's an architect. I apologize. Yeah, there isn't a lot of elevator companies. That is for sure. There's also not a lot of elevators. Yeah, I don't know. Elevator bill. I mean, if you're willing to come on, we can kind of come up with like some topics and conversations and then give you some time to kind of prep. But that would be an amazing conversation. I would like to pick your brain.
Yeah, I would have some questions around elevators for sure.
Cool, he's
All
typing. He's
right.
typing. He's in.
Um, Actually, I had a question too. What was the question about again? Damn,
I don't know.
trying to
What's
find
the
it now.
difference between a commercial elevator and an elevator? Are you talking about like the big giant like hospital
Is it
elevators
the
and stuff
ones
like that?
and the ones that the gates like this and you gotta close it like this and then
I don't think they make
I've
elevators like that anymore.
not anymore, but there's a building I went to in Hamilton. It was uh it was a furniture warehouse, and in order to get to the second floor, they had an elevator like that.
Yeah, that's
So
crazy.
yeah, it was cool
Yeah,
actually.
um, elevator. Yeah, the old buildings are really cool, especially in the States. They have a lot of those, like New York has a
Mhm.
bunch of those.
Mhm. Mhm.
They're scary. I know a property manager that I was hanging out with. She would not get in an elevator, no matter what. Would walk up every time, and they're a property
Yeah,
manager.
that's funny.
You get stuck enough, you meet
Oh,
elevator Bill.
I remembered. I remembered what I was gonna say or ask.
What?
Um, if you should do uh, a sprinkler system or not. Like I know there are certain buildings you would need to have it, but if you had the option to have it or not have it, is it better to have it?
It's better to have a sprinkler system because I believe we can get an insurance guy out here. The insurance goes down.
Okay. What about from a building cost standpoint?
To like you're typically gonna put like sprinkler systems in new buildings anyways. Like anything that's old and existing, I wouldn't. It wouldn't be worth the cost to like retrofit all of that plumbing requirement, especially because that building probably doesn't have the water capacity to like
Mm,
cover. You know what I mean? It doesn't have the pump
gotcha.
or the water line.
Right. Makes sense.
I have actually a fire person that I could probably bring online, and they
Okay. Yeah, that's a good idea.
deal with that stuff. Yeah, this is what I want to
That's a
do
good
is
idea.
create exposures to this stuff, right? Like I think these are like what goddamn networking platform is bringing Elevator Bill on to talk about elevators, right? Like nobody talks
Yeah.
about the renos, man. Not the way we're talking about it, and I think it's important. I think it's important. Running the numbers, no offense, Arrow, but everybody runs numbers, you know? Like it's so
Yeah,
goddamn common. But it is important, right? It's an important piece to know and understand and have them done properly. Um,
but
yeah, I'm
but
listening.
everybody runs numbers, but not everybody runs numbers like I do.
Right.
Okay. You see these color coded, highlighted sections? That's what you got to pay attention to because that's where your returns are.
No, I know.
And
Honestly,
and
I love the way
it's
you run your
necessary.
numbers because they're super detailed and
I'm
um,
just gonna share it again.
I
It's
see them.
so
I see them. You
it's
broke it
quick
down
and
by
lively.
year, like where the money is, like it's complex, man. It's complex. Um,
It's probably not that complex, but
it's
it's
not.
just a better. It just paints a better picture, right? Like if I'm gonna tell you this is a good deal, you're gonna be like, okay, why? Why is this a good deal? You need to
So for
present that picture to
no,
someone.
no, no, for sure. So, but for the launch of, I think by January, we're almost done what we have now. We're gonna be launching like tools, like a digital tool platform, so you could like log in. And what I want to do is it's going to have all the Reno tools that I use, but I want to adopt your numbers thing so that you would just basically ask the questions to the user about the property, and then it's going to plug the
Hmm.
numbers in for them, and it'll just show them your sheet, right? Like
Nice.
we're not going to give them the
That's pretty
Excel
sweet.
sheet to like complex
Yeah,
their
yeah, yeah.
lives. It's going to be like, what's your purchase price? What is the ARV? What is this? What is, and it's going to ask you all the questions, and then we could like have like links to how to get that number, right? Like if you don't have that number, well then you need that number, right? Like we're going to make sure that you have all of the numbers so that you know where, and then if you don't know, we'll put like little tooltips to like where to go get that number, right? Or how you would go get that number.
Hmm. Nice.
But
That'll be
anyways,
really good.
thanks guys. Honestly, I appreciate everybody for staying on this long. Like we've definitely gone way
Yeah,
over time,
really.
and you know the conversations are going. I mean, you killed it today. Like I was dying all day today. Kept it fun, guys. We're trying to keep it fun. We're gonna be doing an in-person event soon. It's gonna be done at our manufacturing shop. Um, and and yes, Vince, nobody runs numbers like Arrow. And obviously, we want to give shout outs to all of the sponsors here, including Vince DeSante from DeSante Engineering, who is our number one mechanical engineer. He's the only one.
Yeah, that was really good to get the insight that when we had this on.
Man, who's talking?
I still have more questions, by the way, so I think we should get him back on.
We are gonna bring him back. We are gonna bring him back. We're gonna go through this. We got to do a day too with like designing units with Henry or something like that, and get him on there and like like really kind of showcase some of the stuff he's doing. I mean, he's running lives on his own, and him and the nerds are like talking building code and like going over interpretations. But we need to get him out on this side and like really doing a live for us, right? Like so that you could ask the architect, questions because there's lots of questions that we have. He's at all these lives, but we should get him up here and do his own because he's definitely a wealth of information as well. Even though I pick on him, so for everybody that's out here, I pick on him because he's my godson. So
Nice.
all right, guys, have a great night. I'll see you guys tomorrow. I'll be back on around 6 p.m. I believe it's with Ping. If you haven't signed up for the event, please do. It's on the event side. The server's slowly changing. We're removing a lot of extra channels. We're just trying to clean it up a little bit to make it easier for everybody. And any feedback, anything you want to see, just let us know. We're here to serve you and like to grow as a team. It's not like anybody's community. It's our community. So let's keep killing it. Thanks, guys.
Have a good one. We'll see you soon.